Over the past few weeks and months, obviously, we've been making a very big hit on the market, reaching new lows established from June, now pushing down even further. This is the Nasdaq 100, and we're going to be looking at the ES and the SP 500 in a little bit as well. When you talk about exactly what to expect, we had a really nice bounce on the market, arguably one of the best bounces since 2020, percent-based, but we almost gave up the entire move going into Friday. This has a lot of question marks on investors' heads, and I'm going to tell you exactly how I see us moving based on shorter timeframes, as well as we look at bigger picture, some of the bearish news we have coming out with the market and everything in between. Now, before I go any further, I have to ask you to consider doing two things: liking and subscribing. Every single day I'm posting videos for you, getting you ready for the market so you never are taken by surprise with any breaking news, and you also know key levels on the chart and stocks that I'm watching as well. Now, as we get into this, I want to talk about earnings. That's going to be kind of the big thing on the board this week. We have a little bit of news coming out. We had CPI, PPI last week, but the big thing this week, in my opinion, is earnings season. And this is where we're going to start seeing the overall flow into what's really happening with these companies. So over the past few weeks, we've been talking about, what's happening with inflation still rising, even though energy prices are dropping. We've talked about consumers, and we saw a lot going into consumers on Friday, and we're seeing confidence start to drop as well. So these are big areas of concern. Now, this week specifically, on Friday, you had some bank earnings, and those weren't quote unquote terrible. However, they were lackluster, and they continue to not give further statements about how they see them to come out in the future. That's a big red flag. Monday morning, you have Bank of America, Charles Schwab, I believe Goldman Sachs this week as well. So you have some big earnings coming this week specifically. Now, on the side of growth, this is where I think the market could get hit. You have Netflix, we have Tesla, Snapchat, and then I believe we have one more. Maybe I'll find it in a second. But those are the big ones. Now, Snapchat, I know you're going to have questions about this, but I'm going to go into a little bit more here because social media will have a very big impact on the market. Now, for the first two, Netflix. We also know that Netflix is a consumer-based company regarding around overall subscriptions. And I think we're going to get big answers on this when we look at consumer data. Consumers weakening overall. That's the main driving point right now on the market. Can we get unemployment to rise? Because the Fed continues to state this, right? They want to see unemployment rise. But can you see consumers lose confidence before unemployment rises? Because we want to see overall consumer sentiment drop, or because we know it's going to drop, but we want to see that drop at the same time that unemployment does, because you want those to happen in tangent. Rip both band-aids off at once. Now, if you get one band-aid off of a time, it's going to make for a more turbulent market, which creates more bearish atmosphere overall for the entire economy. Now, I'm going to go more into that here in a second, but I want to talk really about this, and I'll have more information on earnings throughout the week as well, so stay tuned. But I want to get kind of to the nitty-gritty when we go into the charts, everything in between here. Now, these are just levels I'm watching right now, and I'll bring out the monthly levels as well so you can see this here. Now, as we look here, let's talk about this. If you're watching, if you're not following, I recommend, if you're not on Discord or anything like that, go subscribe to Twitter. I'm telling you right now, I'm posting all day, every day. I had to make a new account, so that's besides the point, but the link is down below. Now, looking at these levels where buyers and sellers are showing up on the board. It's not coincidental, okay? You get a little bit of a breakup, and then you hit it, and then you get dumped down with that bad news as well. In my opinion, there's a few things we know about the market right now as far as volume and follow through. Okay, one, we know every time we tend to bounce on the market, any type of upside movement, volume has been lackluster. The volume here on Thursday was not terrible. I will say that. Thursday into Friday was not terrible. However, it lined up with what we went over on, I believe, Tuesday or Wednesday regarding the margin requirements going on in the EU. Banks had to fulfill those margin requirements, and it stacked right into these new lows being made, and then a major bounce up. And then it proceeded the next day, almost giving up all those gains in between, okay? So I want to make that really clear here, that there is still the case, in my opinion, that the downside has always been here and that there really wasn't any real bounce here. Now, I also have comments being made and people asking, and I encourage you to ask comments or ask questions down below because I really love to educate you guys. So as we look here, people were saying, well, we made a higher high. Now, if you're looking at higher highs, looking at the base of a trend, I don't recommend looking at the 1 hour, the 30 minute, 15 minute, or 5 minute because you're not going to get a trend, right? So for instance, if I come in here and I look at the 5 minute chart, if I really sit down and I look at this, where is the trend here? If I really just zoom out here, this is the maximum I can zoom out on the 5 minute chart. Is the trend? I mean, it's still kind of down, but it looks more sideways, right? But if we come to a 4 hour to 1 day to 1 week chart, you get a clear answer as you zoom out. We are still, in fact, in a downtrend. Guess what? Boom. It's really easy and clear to see. You have also not made a higher high. That's even more evident, more clear to see. Why? Because you can come in and draw a trend line very simply and see that you are not making any higher highs. Okay, we know that. You're also making lower lows, which continues to be one of the most bearish indicators you can have on the market. Continues to happen, okay? Also, we know as well is volume tends to ramp up when we start to decline. So as volume increases, typically we are dropping. As volume decreases, we continue to bounce, okay? This is also a sign of continuation towards the downside. Now, I'm kind of just repeating a lot of stuff I've said, and I just want to make all this stuff kind of clear here. As well as this really quick before I go any further and give you a broad outlook as well. I'm not looking right now to grab puts at these lows. I want to make that really clear. When you are trying to grab puts, when you're trying to go short, from an educational standpoint, you are always looking to buy at a level of supply, at highs, when you're finding resistance, right? That's where you want to buy. Okay, when we bought the first time, this was our range. We got stopped out. Boom. When we bought again, what was our range? Back at these highs. Guess what? Look at the risk to reward. Makes total logical sense again and again and again, okay? Tight stops, really nice risk to reward, name of the game. I'm not looking to go short at lows. That does not make sense because the area and the overall target, the profit potential becomes smaller and smaller as you decline because you have to target your previous lows. We also know every time you make a new low, you've been getting vicious and violent bounces. Now, before I go in, I wanted to cover that before I went any further. As we get to this, I want to make this really clear as well. I've had the same targets for almost 6 months, so I want to make this extremely clear. As we look at the Nasdaq and the ES, Nasdaq, you have broke that key level, then you bounce right back through it. You can see our demand, our last level of support is right here. 10.68 down to 10.6 flat roughly. This is our last line of demand. I believe it's a 15-minute demand zone. If you break below this, in my opinion, you had a hold below this as well. I believe you will see some vicious and violent volume towards this downside. I believe you will before we see any type of bounce. Pre-COVID highs, maybe a little bit higher, around 10,000 flat. Locally, this is just my overall profit range that I'm looking at right now. And then you probably get a bounce from this range. As we look at ES, S&P futures, we're looking at Nasdaq. Now we're going to go to ES. You got very close to this range. We can see the wick was very close, about 100 points away. Going back to NQ, you did not get that close. You still have a lot more room to go. So I want to make that really clear. So I see ES possibly hitting this range quicker. It's also worth mentioning you have a lot more range to go down to your previous low that you just made. You have almost 100 points to go. So these are all things you need to be watching out for. But as we look here, you can still see the trend is obviously very bearish. And if you don't know, my targets, my overall range I'm looking for are pre-COVID highs. About February 20th, February 21st, roughly, that's where you're looking at. That's your target. That's where we want to see us go. Okay? No, sorry, February 20th, February 19th, 20th. So yeah, that's what we're looking at. Okay, going on from there. These are things that I've been looking at as far as a broad scale market. Now, as we look at other indicators, again, we have to stay with the dollar, stay with what's treated us right. Again, I like to say this as well. You don't change your strategy if it's working. Okay, so as we've looked here, as we looked at the dollar, what have we noticed? We've seen continuation flags continually for the past 6-7 months. Continuous bull flags over and over and over. And it's looking right now like you're trying to push up and make a new high on the dollar. The dollar still looks incredibly bullish, right? As you look at the dollars, the basket of dollar, DXY, the Dixie. If you want to get a better look too, let's look at the euro compared to the dollar. Look at where this bounced. So you actually, when you were getting a bounce on the market on the 27th, basically through the 4th, look at where the dollar bounced. So the euro was going up in value, and look where this was rejected, directly at $1 to the T, and then you drop back down. I believe the euro, I believe all other currencies will continue to get hit compared to the dollar. My personal beliefs, how I see this working, personal opinion, take that with a grain of salt, do what you got to do there. So that still looks incredibly, incredibly bullish on the dollar, which is bearish for the economy. As we look at the yield inversion, again, this is probably one of the biggest flags that I believe we're going to get some really good movement very soon. This is on a daily time frame, the 10 to 30 year inversion. This gives us a best representation of inflation and when the economy is in danger, when the 10 inverts over the 30 or as this gets close. I see people mentioning the 2 year and all those. And again, those are important. I'm not saying those aren't important. But if we go back in time and look, this has only happened at really crucial times. 2018, 2008, the dot-com bubble. Okay, very, very clear. Now, as we look here, you are sitting in this area of inversion for a extended period of time, and you're also stagnating. Every time we stagnate on these yields, on the inversion specifically, what happens? We get more volatility to the up or to the downside. So this could be a breakout potential for further upside to highest levels that we've seen since the dot-com crash. Or you could see a little bit of a decline back towards the trend line. It's worth mentioning, you've been making these higher lows on this trend line since 2020. So once it starts to break down, then I'd be a little bit more cautious about seeing some sort of bounce on the market. But until then, big red flags, a lot of the concerns, and I'd be pretty worried about this right now. Again, this is my opinion, what I'm looking at, other indicators. And I'm only using these because these have worked in the past for us, okay? That's why I like to keep everything documented, not delete too much information from the charts, because I like to show people that when you really study your work and you really take the time to make sure you're looking at the right things, you can go back and show a proof of concept with your work. And that's what we do here on the channel. It's driven by data, facts, and overall fundamentals as well. Next up, junk bonds. Junk bonds continually look terrible. Don't want to spend too much time here, but I think it's really clear junk bonds look just absolutely horrible. That's my opinion there. Now, going into this week, talked a lot about stocks, specifically stocks, and I think stocks have a lot of room to move. As we get in here, SPY, again, if you don't know, my target range here is down to like 339, 340. That's where I'm looking to get a bounce around down there maybe. That's where I'm looking at. Now, as we look at specific stocks, very interesting. Tesla, not a trade for me during earnings. Up into earnings, I like it. I think you'll get good movement. Your IV will be pretty consistent. Options on Tesla, I like. Now, it's worth mentioning, what did Tesla do on Friday? No one's talking about it. Really curious as to why. You made new 52-week lows once again. You broke through this level. And remember, if you go back to my video from last week when we were trading around 226, this was the target, and now you're below. I'm looking for a $200 test. If you break below $200, in my opinion, 187 to 180 is your next range to test, and it will be pretty tough, if you will, for Tesla. So I'd be looking down there for some sort of support, which goes pretty far back on the book, all the way to 2021, May 19th. This is where you last found support here. I do think this area will try to hold and will be a decent level of support, so make sure you keep this eye out, and I'd be looking for calls around that area for myself. Now, going into this, looking at other stocks, there's a lot of cause for concern, and the most interesting thing from this earnings sheet, in my opinion, is Snapchat. And someone mentioned in Discord today, which shout out Michael Joseph, appreciate it, awesome thing to notice. Snapchat. Even if you don't want to trade Snapchat, because I probably will not trade any options on Snapchat because it's a smaller cap. I just haven't liked trading those options and premiums. Now, I'm going to tell you a few things here. Snapchat earnings have moved the market. Why? Because they are social media and they're one of the top names in social media. I want to make that very clear and very known. Snapchat earnings will affect Meta 100%. They will affect Google. They will affect those because ad revenue derived from them is very similar to Meta and to Google. Not the same, not identical, but it's similar in ways. Okay, I want to make that known. As they get good news regarding that data, we've seen Meta, we've seen Google bounce. So I want to make that really clear here. Now the chart here, it's not beautiful. I'm going to tell you now. You can see you were trying to make these higher lows here, and guess what? It failed once again. So looking at this, I would be cautious. However, I do think they could have some decent earnings. I think they could announce overall growth on the platform and growth on their ad revenue as far as what they are doing, because they are branching out with creators if you follow them whatsoever. And I think Snapchat is in the right direction. I do like them longer term, really unpopular opinion, but I really do like them. Now, if we look at Meta and these others, it's worth mentioning that these are some of the hardest hit stocks right now. Look at Meta. You are well below 2020 lows. You are now testing lows from 2018 and a support going all the way back towards 2016. Yes, Meta, Facebook is in the absolute toilet, aka the trash can. That's a major concern here. Google, not so much. Google is definitely holding up. One of my favorite longer term companies. This is why I like it, because it's holding up so well. The chart looks terrible as well. Looks like it wants to drop. But in my opinion, going into Thursday, I think this is one of the highest, most valuable risk reward trades out there, because I do think this has the only potential really to bounce in the market right now. I don't think Tesla, I don't think Netflix earnings are going to be great. I think Netflix will have a good outlook and what they're going to be doing with their ad revenue, but they've really kind of pushed all their good news this past week if you've looked at any of their news. So make that well known. Just, keep your head on swivel. That's what I'm looking at there. But as far as stocks, that's really my opinion there. I think Meta, I think social media stocks have the best potential for upside because Snapchat's earnings, and they've already been hit just so much. So it would not be a huge surprise to me if Snapchat has decent earnings. I'd be on the lookout for there. As far as other stocks in the entire market, again, very similar pattern, sitting at basically these major levels, and you're ready to dump. But it's worth mentioning the stocks that we've liked from the beginning, you big names, Google, Apple, they're holding up. They're standing the test right now. However, I do expect them to test 52-week lows. Okay, I don't think they won't test it. I don't think they're invincible. But it's worth mentioning when you're looking at this, and this is maybe a not scalping video or going over quick day trades, but this is more preparing people for what to be looking for during a recovery bounce, or like we had, basically from June into August, right? Because you're going to get these all throughout the bear market. Look at stocks that performed well for the first bounce. Chances are they will perform well for the second bounce, the third bounce, whatever it may be, because those are the names you want to see. We've seen Apple almost go back to 52-week highs. It almost tried it, right? So I'm looking at these stocks. I'm looking at which one shows strength, and that's my overall view in the market. However, again, keeping my head on a swivel, staying pretty cautious, not jumping into anything crazy. However, there's still areas of the market where I think you can definitely make money from. Specifically this week is going to be social media, where I keep all my eyes on as far as most likely trading those. But that's what I'm looking at. Going into SPY, I definitely think there's room for downside here, especially with these earnings. These earnings will dictate, in my opinion, how we move for the next few weeks. Earnings season could be pretty catastrophic if they do not meet somewhat of the expectations. I'll see you guys tomorrow.